Good morning, gold traders. This is Shaiju. I would like to share my gold analysis this week. The pair XAUUSD. This is a monthly time frame, and you can really see the monthly trend line has broken and closed below the trend line on September and October. We are tested back the trend line and closed below the trend line again. So this is actually a bearish price action. I agree with this. However, I am expecting a bullish move on gold by end of the year 1960 or 1958. That's what I'm looking by end of the year. This yearly high that I'm looking into by December. Let's see how this technical analysis on weekly time frame. On a weekly time frame, I see a bullish pattern which is called cup and handle. Cup and handle pattern is a bullish cup and handle pattern, and here is the neck or the edge of the cup. Um, that is 1830, and if this pattern is forming, if the pattern is valid, I am very glad to see yearly high on gold this year. So that is 1970 or 1965. Let's go and check into daily time frame. Before going there, let's have a look here. This is the weekly trend line has broken and closed over that, and let's see what happened on a daily time frame. On a daily time frame, if you draw a trend line which is from the low of 30th September and connecting to the 12th October, connecting to the 18th October low, you can see there is a price breakout at 1790, which is a good sign of a weakness. But I'm not agree with this kind of analysis because this trend line is just only 2 points to touching it. It's not a valid trend line, as first of all. Secondly, I'm looking for a trend line like this, which is a favor of a light wave perspective. Why? Because I am seeing an expanding wedge here when you're connecting these two highs. The expanding wedge pattern is a common pattern in cup and handle weekly time frame that you see it. So the cup and handle formation on the right side of that side of the cup, we are making an expanding diagonal, which is common, and here because of this pattern, I'm expecting a bullish move from 1776 or 1772 towards 1824. That's what I'm expecting. So there's a lot of question we asked on Friday. What happened? Why the gold dropped on Friday? It is very simple. There was buyers are out because of the Fed meeting on coming on next week. Buyers took their profit. They wanted lower price to buy the gold again. So immediately when the buyers are out from above 1800, there was no volume to pull the price up towards 1830. So there was not enough buyers. So better they can buy it lower. That's what exactly happened. They buy it from around 1776, and they are pushing gold up towards 1830. So this is a nice price action in gold. So anyway, we have heard about it. There are a lot of things. The patterns will be repeat by itself, and I found similar price action here. The patterns and price action here when you're measuring the drop, I'm very confident on this drop where I'm gonna ending it. It is actually ending at 1725. I exactly bought this price, and when you measuring the swing, the price action from the drop, from the high from 1830 to 1782, you keep this levels 1831 and 1782, because this can be the handle. This price action, this structure can be the handle of the cup in coming time because market will remember this level. So as you can see here, you can see the price is touched as 161 point perspective, so 161 5 extension. Before reaching 161, it touched 127 and pulled back to 61 percentage, and then only it touched 161 fiber ratio. Let's have a look here. What is the status? What is the current status here? Where's the fiber extension over here? It's 1824. What's currently 1807? 1807 is touched, does not crossed. It come back and tested 61.8 percentage. The price action repeating again. So here again, a price momentum towards 1830 will happen, and you can short this price towards the level of this area, 1782. So it is 100% short. We can short 1830 to 1870, 1782, because that's the handle. Once you reach 1782, that's this trend line has been supported. Coming from 1830, this trend line will support, and this weekly trend line resistance will also get support. So this is around, we can expect around 10th November the price can come back and test 1782. And during FOMC we break this high and we touch this level, and once you are reaching to this level, there is a NFP will be there. NFP will be definitely bearish on gold, that will struck back to 1782. So that's what I'm expecting. My next week I'm expecting a bullish price action towards 1830, and then NFP will bring the price back to 1780 or 1790, somewhere around 1790, and then this cross back to I mean, after next week it will be break, because once you have NFP is closed somewhere around 1790, that weekly candle should be definitely a bearish candle. So you have to expect a little more bearish momentum after that. The buyers has to enter out day after, I mean the next week, after the next week the buyers has to enter somewhere around 1782. What I'm talking about, if you didn't get the picture, see, this week will be the bullish, and it reached somewhere around 830, and we cut a bearish on NFP. After Fed, there will be NFP. So we get a price action bearish on NFP. Maybe we get a big rejection candle from 1830 towards 1782. That's what I'm saying. So next week, it's not going from here to here. Instead, it's going from here to here and it's coming after NFP. That's what I'm expecting. So why I am going for a bullish pattern in early next week? Because I found a interesting harmonic pattern here, which is called 1 to 1 bearish, or sorry, 1 to 1 bullish. 1 to 1 bullish pattern is the target of 1 to 1 bullish pattern is a new high or 88 percentage of the correction. So normally that is the way we have to analyze the market. 88 percentage. Here is the 1 to 1 pattern. So you need to target 88 percentage, which is say 808. So this pattern's target is either 88 percentage or 127 percentage. So these are the two levels for this pattern targeting. 127 is 1825, which is exactly 161 point. What the fiber ratio? We got it here. Let's see. Fiber extension. Starting from this to this. Yeah, 124. And again, this 127 fiber extension from this swing, from this high to this swing, 127 is confluence with the fiber extension. So that's why I'm expecting this. It will definitely break because it needs to. There was some gap here, so we need to get filled that gap. So we can definitely pull up this one somewhere around 30, a little bit more, and touch this trend line, and then started to pull it. The bears are coming in after that. So that's what I'm expecting next week. So I wish you everybody, every gold traders, green pips. So let's trade with your own risk, and of course with stop losses. You know the levels now, which one is need to be targeted, which one needs to be supported. So here we found 1777 was the fiber confluence you see, and here there is again fiber confluence at 1830. So you know the levels now. So in between you can trade according to, you can plan your trade, you can make good money or good pips in between. And this is Shaiju signing off. Wish you everyone green pips next week. Bye.